All right, so in this video, we're going to be covering the possibility of what we need to have that overshoot and get to around 20 cents. So we're going to be taking a look here in the charts here because right now we see a divergence between what the capital going into Bitcoin is doing and what the capital coming into Doge is doing. Doge is not showing signs of a consolidation. Now you can take a look at this on the candle here and the strength of it and really just the size of it compared to what's going on in Bitcoin here, because Bitcoin is showing signs of consolidation. Doge is not right now. So it's still on trend, but it's not showing signs of consolidation. So we're going to take a look in here and kind of take that apart and give us the projection of us even getting to 20 cent, possibly even going higher than where we are now based off of where and when we consolidate. So take a look here at the this candle here. Right now we're at around 1323, right? And we were talking about, if you watch the last couple of videos, about this new trend here that we seem to be establishing. Remember, this trend can establish itself anywhere along this candle as long as there's not like a sell-off or anything where it comes back down to grab liquidity. Anywhere we start getting that momentum and trending sideways where it's not necessarily a huge candle, but it's still a progression day over day, because these candles can be absolutely minuscule, but typically as long as it's kind of chugging along, it's remaining on trend. So but that's not the case here. We had a smaller candle the day before, but today we're certainly in the red zone here, and this is kind of establishing, okay, well, where are we going to have this sell-off? Where are we going to get liquidity from? Or are we just going to have something similar to what we've seen here? It's like a sideways movement, and then we have the takeoff. So I want to do a brief recap because this is important. If you haven't watched my last video, we talked about the possibility of going up and exhausting the run and then coming down and grabbing liquidity from a slightly lower level, then continuing the run, which is pretty much what we did here in November. Now, what we're looking at here is we pretty much blew through two zones on this run. And this is very, I'll say, abnormal, especially even for Doge, right? So if we're looking where we were before, we're down here. I want to make sure I show you the names. We're down here on the 382, it's the Fibonacci, right? We blew through the 796, blew through the 954, 1123, the 382, and now the 618. And now we're up here in the red at the 1627, negative 1.6618, right? And typically this is where if you were able to get in here, so for people that's trading, you'll see that the volume, it starts kind of selling off here, because for the people that's trading, this zone here is typically where they're going to take profits. This is kind of like the meat of the trade here. Like if you were doing a trade and you were able to get into the asset here and it runs up in here, you've done well, right? This is where you don't let greed take over. If you're trying to flip an asset, this is where they're taking profits. But also, you have to say, if you're looking at certain assets, especially in crypto, this works well on stocks as well, but especially on crypto, you can't, it reacts differently compared to stocks. It gives you an idea, but typically, like if you're trying to chart NVIDIA and say like, oh, I'm going to take profits here once it gets into the red zone, but you would have missed out on a ton of gains because it's absolutely blowing through all of those zones. So you have to kind of look at like the underlying push and where that liquidity is coming from. But if you are looking to where it's going to establish the liquidity pool, where it's coming from, right now, this is mostly new volume coming in. It's just people saying that I believe it's going to go higher and I don't want to miss out. So when we establish a liquidity zone, this is where people are currently buying in, and then we have a retracement where the trend starts to get weak, and we say, okay, well, it starts going sideways like this. This here starts to build up a liquidity zone. And that's where new money is comfortable buying in, and so is the old money that previously bought in, because they're saying, okay, the run has exhausted itself. It's showing strength here. It may not consolidate back down. I might as well go ahead and buy in now. This is a liquidity zone where you see the trend going sideways. That is a zone where the market has mutually agreed. I believe this is a fair price for where we are right now in the market. And what we're seeing here, I'm going to flip to Bitcoin really quick. What we're seeing here is we're seeing something like that kind of develop here for Bitcoin. This is the sideways here. It's not giving up gains necessarily, but we're seeing this sideways momentum, and it's something similar to this here. It can still be trending up. It can trend down a little bit, but this is where you start establishing those floors. This is healthy for the next leap, right? Because what you don't want in a situation like this, it's okay if it starts slowing down, doing smaller candles. It's still going up, but doing smaller candles, grabbing liquidity, the market's going back and forth, and you have the next run. Same thing here. Had a bit of a sell-off here, but again, didn't give up all the gains. Grabbed the liquidity it needed from the high 38s, went on the next run, right? So it appears this is what's happening right now. They're saying, okay, well, we're not ready to go to 70K. No one's not necessarily comfortable buying. We'll see this kind of play out, and then it goes on the next run. For Doge, we're still waiting to see that, because right now the candles are too strong and they're too big to kind of determine that. We'll have to kind of see some smaller candles get in here in the movement and say, okay, well, where is this going to play out? Because right now we're still on the projection to going to 16, but we don't have necessarily a consolidation point or a floor of liquidity right now. Because right now, as long as these candles, until we start getting some smaller candles in here, we still threaten the possibility of where the liquidity is, right? And we don't know, right? The market has to determine that. The buyers and sellers may have to determine that. So, these gaps, typically you can, let me show you a gap. Even if you look here, like when you have these massive green days, you may not necessarily fill all of them, but gaps typically fill. And you can have a big red day as well, right? Because that floor of liquidity has not been established. So that's what we're looking for here, is to determine where that floor is going to be. And then we can say, okay, well, based off of where that floor is, we can make the case for how strong of a movement that we're going to have to even overshoot this and go toward 20 cent, right? And this is really good here. I'm going to make some adjustments to the chart here, because we are moving somewhat. I can probably move it up a little bit, but it's not gonna make a big difference here. But just because the trend is moving, I'm gonna make some adjustments here, and I'll go over that in the next video for those of you who chart along with me. But so if we're going to make the case for 20 cent, I do believe that where we are now with these candles, unless we're going to continue to get bigger candles, we're going to need a consolidation point somewhere between 13 and 16 cent, right? So somewhere in this red zone, we're going to need some sideways movement to build a strong floor to get to 20 cent, right? Because yesterday we saw an 800% increase in shorts. They're not going to go away the higher this goes, and they are looking for weakness in the trend here. So what we'll see probably is even like a 5,000% increase once these candles get smaller. Because right now the candles are big, so they're going to be cautious. We can take a look. They may even come out and re-enter. Let's take a look here. So right now they're still building. They have not exited these positions yet. Some of them got out, but again, we went from the 14-day average yesterday to the 200-day average. That's how many shorts are in Dogecoin right now. We're at the 200-day average. So definitely a big deal here as they're trying to pile in to get this thing to consolidate. So the strength of this movement is going to determine, how aggressive they are coming in. But as of right now, the candles are absolutely huge, so it's not that big of a deal. But if we're going to get to 20, we're going to need to have a consolidation point somewhere in here as liquidity, so that we're not risking, any type of macro or something like that causing a massive sell-off, and then we have to play where's the liquidity with these green candles here, because that's what's going to happen if there's any type of FUD or panic or bad news, quote unquote. Bitcoin sells off, who knows, right? And we'll have to kind of find where the liquidity is going to be, and right now it's to be determined. So it's looking like, based off of the current trend, we're going to get this fourth candle here. We can kind of establish this as the new trend, but ultimately we'll need to see some smaller movements and some sideways movement in order to get that run to 20 cent safely, right? And I'm not gonna say safely, but safely meaning we get there and you can kind of like maintain it. Otherwise, you can have that big run to like 17, 18, 19, even 20 cent, right? But is it going to be able to hold it, or is it going to be something like a flash, but it gets there and it is a combination of shorts going to heaven, traders to be jumping out, and people that are long-term holding, but they're scared because they haven't seen these profits in a long time. And they say, hey, we're going to take profits. So that's what makes a big difference. So yeah, keep that in mind when you're looking to enter the assets, because that's going to determine like the next movement up and make the case for 20 cent. But right now, this is completely um, this is completely, it's a completely strong movement, and it certainly has exceeded my expectations of what this market is going to do, and the explosiveness of us blowing through these trends. So we're just going to keep that in mind and keep charting and see where this next candle is going to close. I said the next 48 hours, so we're going to have an answer here very shortly on this trend, and we will go from there. And I'll provide some updates, and we'll see what the projections are like and the strength that we're going to have at these levels as we keep sending up and find out where that liquidity zone is going to be. So if you enjoyed this, make sure you subscribe to the channel. If you appreciate factual information, appreciate no hype, no FUD, any of that hopium coming into the market. I appreciate you guys. Subscribe to the channel, like the video, share it with a friend, and I will see you guys in the next one.